Shiba Inu summer rally appears to have run its course as the token has broken decisively below the rising parallel channel it had occupied since June 22nd, signaling that the uptrend may be over and fresh weakness could lie ahead, while SHIB traded as high as $0.00016 during late July. This week saw a major pivot point breached, with the price tumbling beneath the channel's lower trend line on heavy volume, a classic early warning that buyers have lost control and sellers are seizing the reins. That reversal coincided precisely with a dramatic uptick in profit-taking by large holders. Data from Intothoblize shows net outflows from whale addresses defined as wallets holding more than 1% of SHIB. Circulating supply fell by 456% over the past 7 days. In plain terms, the biggest pockets of SHIB have been offloading hundreds of billions of tokens rather than continuing to accumulate. And that shift in supply dynamics has injected considerable downward pressure into the market, compounding the on-chain signals. Derivatives metrics also paint a grim picture. Total open interest in SHIB futures has plunged by 35% since July 22nd, sliding from roughly $327 million to $212 million as of this morning. When open interest falls alongside price, it often implies that leveraged traders are exiting positions rather than confidently adding new longs, suggesting that speculative conviction in SHIB's ability to sustain higher prices is evaporating. Put simply, the days of retail frenzy and leveraged optimism appear behind us for now, and the market is reallocating risk away from the meme coins. Latest epic run. From a technical perspective, SHIB is now contending with a heavily defended resistance at $0.001362, previously the midpoint of its summer channel, and failure to recapture that level could open a swift descent toward key support near $0.0001239, which aligns with a 200-period exponential moving average on the daily chart and a confluence of prior swing lows should selling intensify. The next material floor sits around $0.0001150, marking a deeper retracement of up to 30% from recent highs. However, fresh buying demand emerges, potentially triggered by oversold readings or renewed whale accumulation. SHIB could attempt to wrest control back above $0.0001362. Clearing that level with conviction might reignite short-term momentum and set sights on a retest of $0.001467. The next Fibonacci resistance derived from the July high to the channel breakout low, yet opportunity and risk remain intertwined. On the bearish side, continued outflows from whales may sap liquidity, causing thin order book conditions that amplify downward moves and trap buyers as support levels fail. Regulatory crackdowns on centralized exchanges, where most SHIB trading occurs, could further tighten liquidity and spur nervous selling because meme coins often rely on social media hype to drive demand. Any shift of narrative toward newer, hotter coins could suck capital away from SHIB, and a heartbeat history shows that meme coin cycles burn hot and fast before collapsing into severe retracements. Converse, the very decline that unnerves bulls also lays the groundwork for value buyers who view SHIB network activity and development roadmap as underappreciated. On-chain metrics reveal that daily transaction counts and new wallet creations have not collapsed in lockstep with price, suggesting that real utility in gaming integrations, community NFT projects, and decentralized tipping use cases remains robust. If these on-chain fundamentals hold, and whales begin to rebuild positions at these lower levels, the pendulum could swing back in favor of a mean reversion rally. In addition, broader bullish catalysts such as a Bitcoin or Ethereum surge lift altcoins in tandem, offering SHIB an external tide that could power a rise above entrenched resistance. Risk management is therefore critical. Traders should consider scaling into new positions around $0.0001 to $5 to $0.0001 to $4, sizing entries modestly given the heightened volatility and employing stop orders beneath $0.000122 to guard against sudden breakdowns. Meanwhile, those targeting a rebound can trim partial gains near $0.000136 and $0.000147. To lock in profits if we see swift rallies, long-term holders with a bullish view on SHIB's community and ecosystem should treat current weakness as a buying opportunity, but maintain a long leash diversifying into other high beta tokens or layer 1 protocols to mitigate single token concentration risk. In summary, Shiba Inu's departure from its summer uptrend channel and the avalanche of whale profit taking have ushered in a more defensive market posture. Price declines could extend toward $0.00001239 and below, while a reclaim of $0.001362 would be the first step toward restoring confidence and eyeing $0.001467, the interplay of on-chain whale flows. Futures open interest in key technical levels underscores the dual nature of the present setup, significant downsides if sellers intensify, but compelling upside traps for disciplined buyers as oversold conditions and rising network activity beckon for any investor or trader navigating SHIB next chapter. A balanced strategy, one that harnesses both the risk signals and the latent opportunities, remains the only way to traverse memecoin volatility with surgical precision. The summer momentum fades and SHIB navigates life below its uptrend channel. The memecoin's next moves will hinge on whether whales and speculators step back in at lower levels or continue to press. Sell a reclaim of $0.001362 could revive short-term rallies, while a deeper drop towards $0.00001239 and beyond may invite fresh accumulation from value-seeking investors. With on-chain engagement still robust and the broader crypto tide capable of lifting altcoins in a rally, SHIB retains the potential for renewed strength, but that outcome will require a clear shift in market conviction. Until then, traders and holders alike should remain vigilant, balancing the promise of opportunistic rebounds against the risks of further corrections, and letting price action around these critical support and resistance zones guide their next decisions. Looking ahead, the sustainability of SHIB's story will depend on 4 key factors: continued network engagement, whale behavior, derivatives, market health, and broader market context. If on-chain metrics, daily active addresses, token burn events, and protocol integrations maintain their upward trajectories, they will underpin genuine demand that can outlast speculative swings should whales pivot back to accumulation once support near $0.00012 proves resilient. It will reinforce the supply floor and embolden retail buyers. Conversely, any fresh spike in negative funding rates or a sharp contraction in open interest could reignite selling pressure and destabilize price structures. Finally, SHIB's fate will always be tied to the broader market. A strong rebound in Bitcoin and Ethereum often carries memecoins upward, while major market sell-offs drag them down indiscriminately. By keeping a close eye on these dynamics, monitoring whale wallet flows, funding rate trajectories, on-chain engagement, and key support resistance pivots, traders can navigate SHIB volatility with informed precision in the ever-evolving memecoin landscape. The balance of opportunity and risk remains razor-thin, and SHIB's next move will reflect which side gains the upper hand in the days ahead.